Ever feel like you're drowning in a sea of debits, credits, and ledgers? Yeah, you're definitely not alone. So think of this as your life raft. It's a quick, no-nonsense guide to the absolute fundamentals of accounting. We're going to strip away the jargon and make it all make sense. Let's jump right in. Here's our game plan. First, we'll tackle why accounting even exists. Then we'll walk step by step through the core process. After that, we'll clear up some confusing terms. You know the ones. And we'll wrap up by looking at why any of this actually matters in the real world. Sound good? So let's start with that big question. Why bother with accounting at all? Well, it wasn't just invented to give students a headache. It was created to solve a really common problem that every single business faces. I want you to just imagine this for a second. You start a new business. It's your passion project. Over the first year, you've got thousands, literally thousands of transactions. Money's flying in from sales, money's flying out for bills and supplies. At the end of the year, you sit down, and how do you possibly know if you actually made any money? It's just a mountain of information. Let's make this totally real. Meet Mr. Amit. He's got a great idea. He's starting a pen business with 5 lakh rupees. Now think about his costs. Rent, employee salaries, buying supplies, you name it. And of course, he's making sales. Without some kind of system to track all of this, his finances would be an absolute disaster. He'd just be guessing. And that right there is the problem accounting was born to solve. So how do we take that financial chaos and turn it into something clear and useful? Well, the answer is a very logical step-by-step method. We call it the accounting process. This whole process is designed to turn raw, messy financial events into information you can actually use. It follows a really clear path. You identify and measure transactions, then you record and classify them. After that, you summarize everything into easy-to-read reports. And finally, you analyze, interpret, and communicate what it all means. Let's take a closer look at each step. First things first, you have to identify what even counts. You're basically asking, does this involve money? So paying an employee's salary? Yep, that's a financial transaction. But what if 2 employees have a big argument in the break room? Well, that might be a problem for their manager for sure, but you can't put a rupee value on it. So for accounting purposes, it's ignored. Okay, next up, measure. Once you've identified a transaction, you have to put a number on it. And here's the golden rule. It's not about the sticker price. It's about what you actually paid. So if a new company phone has an MRP of 1 lakh, but you negotiated a great deal and got it for 80,000, well, the transaction is measured at 80,000 rupees. That's the real number. Now for step 3, and this is a big one, record. This is where you make the first official entry for every single transaction. It goes into a primary book, which we usually call a journal. You can think of it like the business's financial diary, where everything is written down in the order it happened. So now you've got this long diary of transactions, but a huge chronological list isn't that useful, is it? That's where the next step, classify, comes in. This is all about organization. You group similar things together. So all the money you spent on rent goes into one bucket, the rent account. All the money from sales goes into another, the sales account. This big book of organized accounts is called the ledger. And here's why that is so powerful. Look at this example from Mr. Amit's rent account. Instead of having to hunt through that long journal for every rent payment, we can just look here and bam, we know instantly he spent a total of 15,000 rupees on rent. See how it turns a messy list into one clean, useful number? It's a game changer. Okay, once everything is classified, it's time to summarize. This is where you put together the big picture reports. I like to call them the financial report cards for the business. You've got the profit and loss account, which tells you how the business did over a period of time, and the balance sheet, which is like a financial snapshot on one specific day. And finally, we get to analyze, interpret, and communicate. Honestly, this is where the magic happens. This is where all those numbers get turned into actual intelligence. You look at the statements to see what went right, what went wrong. You use that to make smart decisions for the future, and you share that info with important people, like investors, banks, or the government. All right, now that we've got the whole process down, let's clear up something that trips up so many students: the difference between bookkeeping and accounting. And trust me, they are not the same thing. This table lays it out perfectly. Bookkeeping is really the first part of the process we talked about, the identifying, measuring, recording, and classifying. It's the groundwork, keeping systematic records. Accounting is what comes next. It takes all that data from the bookkeeper and does the high-level work, summarizing, analyzing, and explaining what it all means. Think of it this way. Bookkeeping is about recording the past, and accounting is about understanding it. Okay, so we've covered the what and the how. Now for the most important question of all, the why. Why do we go through all this effort? What is the actual real-world payoff? The benefits are just massive. Good accounting gives you the hard data you need to make smart decisions. It means you don't have to remember every single transaction. It can be used as evidence in court. Plus, no bank is going to give you a loan without seeing your books. It also helps you catch errors or even fraud, see how you're doing compared to last year, and make sure you're paying the right amount of tax. It's not just paperwork, it's the language of business. But, and this is a really important but, we have to be clear about what accounting can't do. At its core, accounting is historical. It is a perfect, factual record of what has already happened. It tells you exactly where your business has been, but it doesn't come with a crystal ball to predict the future. And that really brings us to the final crucial point. Accounting gives you this incredibly clear, precise map of your financial past. The real art of business, the real challenge for any owner, is taking that perfect map of the past and using it to navigate the future. How do you turn that history into a forecast? Now that is a million-dollar question.